Yes, let's begin related services where we have two standards 4400 and 4410. Okay, one is agreed upon procedures, the other one is dealing with compilation engagement. Now you see, apart from assurance engagements, there are some other services that we can provide. We can call them as related services. Assurance engagements are again two types: on historical financial information, other than historical financial information. On historical, we give two levels of assurance. One is reasonable assurance and other one is limited assurance. Reasonable assurance is called as audit. For that, standards on auditing were there. Limited assurance have standards on review. And we can also provide assurance on other than historical financial, that is prospective information and internal controls. For that, we have something called standards on assurance engagement 3000 series. And apart from all this, we also provide non-assurance services. We call them as related services. Now, what are related services? One is agreed upon procedure, another one compilation engagement. For example, stock audit is an agreed upon procedure. Stock audit is an example of agreed upon procedure if that does not involve assurance. Okay, we just go count physical inventory and see the tally with the records, and then we just give a report on it. If this is the only task that we have, then we generally call it as what? Agreed upon procedure. Then compilation. Compilation means what? Some companies specifically ask you for assisting them in preparing financial statements. So that is called as compilation. Now, so in assurance engagement, practitioner express conclusions to increase users' confidence. In audit, this conclusion is called as opinion. In a review, we simply call it as conclusion. Then, related services. All engagements are not assurance. We can also provide some other services like tax return preparation, consulting, engagements covered by various related service standards. So, what is agreed upon procedure? Here, the auditor reports factual findings based on specific procedures on financial information, elements or accounts, items, whatever. Suppose a company specifically called you to do external confirmation procedure. You just went, took the accounts receivable data, designed external confirmation, asked third party, got the confirmation and gave back to the company. This is an agreed upon procedure. Stock audit, agreed upon procedure. Physical verification of inventory, agreed upon procedure. Physical verification of fixed asset, agreed upon procedure. These are all various agreed upon procedures where companies will consult chartered accountants. Next, role of the practitioner. You need not be auditor for performing agreed upon procedure or compilation. So related services can be done by anybody. Yes or no? Even auditor can do, provided that is not conflicting ethical requirements. Next, in all these standards, SRS related services and SRE 2400 and SAE 3420, SRE 2400 review of historical financial information. Okay, not by auditor, review of historical financial information. 3420, engagements to report on pro forma financial information. And in all SRS standards 4400, 4410, the word used is practitioner. Okay, then SRE 2410. Okay, review of interim financial information by independent auditor. Yes or no? So that is 2410. And in all assurance engagement standards, what are assurance engagement standard? PFI. Yes or no? 3420 I already covered here. 3402. 3402 means auditor giving an opinion on controls. Type 1 report, type 2 report. That one. Okay. In all these cases and remaining all standards on auditing, we use the word auditor. Understood? That's it. Just some students have confusion where auditor word is used, where practitioner word is used. That's it. Next. Now, what is SRS 4400? Engagements to perform agreed upon procedures. What is the objective of agreed upon procedure? It is only reporting factual findings. We only report findings. That's it. Perform audit like procedures agreed by auditor, an entity and third party, where we have to ultimately report factual findings. No assurance is provided. Users will draw their own conclusions based on the report that we are providing. The report is generally restricted to agreed parties to avoid misinterpretation. Next, difference between audit and agreed upon. Here we express opinion, where we only give factual findings. No assurance. Users draw conclusions, and it's a non-assurance engagement. Now, what are the general principles of an agreed upon procedure engagement? General ethical principles. All ethical compliance. Like you must have integrity, you must have objectivity, you must have competence, you must be performing it with ultimate care, you must maintain confidentiality of client relationship, all that. But independence is not mandatory, because here you are not providing any assurance. So independence may not be mandatory. However, terms of engagement may require otherwise. Suppose client may want even the related service provider also to be independent. Next, terms of engagement. Understanding of agreed procedures. Ensure that all parties understand procedures and condition. Better to have an engagement letter to avoid misunderstanding. and include all the agreed procedures, and mention the fact that the report is distributed only to restricted parties. Next, matters to be agreed. What is the nature of the engagement? What is the purpose of the engagement? What financial information, on what financial information we should perform agreed upon procedure? What is the nature, timing, extent of agreed upon procedures? Report distribution limitations. Do not accept if there is a conflict with legal requirements. Suppose if a company is asking you to perform agreed upon procedure because of a requirement in law, then see that the terms and conditions are in accordance with the legal requirement. Planning agreed upon procedure. Plan the work for effectiveness. Carry out agreed procedures. Use evidence for factual findings. You know what and all you will do in agreed upon procedure. You will do inquiry, you will do analysis, you will do recomputation, you will do comparison, you do clerical checks, you may do observation, you may inspect. Any procedure you can perform. There is no specific rule. For review engagements, no. In a review engagements, no. We do limited audit procedures like inquiry, analytical procedure. Whereas in agreed upon procedure, you can do any procedure. Whatever requires. The procedure, whatever agreed with the management, what kind of processes it require, all those processes I will perform, which may be recalculation, reperformance, compilation, anything it can be. Next, documentation and reporting aspects in agreed upon procedure. First, what are the elements of the report? Title will be there, address will be there, identification of specific financial information or non-financial information. You see the standard heading, engagements to perform agreed upon procedures on financial information. But in the preface of the standard itself, they told if at all you are called for non-financial information agreed upon procedure, you can apply the requirements of the standard subject to modification. That's what they told. So you can also perform agreed upon procedures for non-financial information as well. Non-financial information means what? Employee screening, employee classification, assets classification. In all these cases, you can help. Management might take your help. Next, so and this point is important. 4 marks question they can ask. In the agreed upon procedure report, no, you need to mention specifically certain statements. These are called as caveats. These are also called as disclaimers. Okay. In agreed upon procedure report that you are giving, you need to specifically mention this statement that these procedures are not an audit or review. Accordingly, no assurance is provided. If at all additional procedures we perform, we might have found out some additional matter, and the report is restricted to agreed parties. We only report on related specific elements, and we are not reporting on entire financial statements. These statements have to be mentioned in the agreed upon procedure report. Next, signature. Date, place of the signature, audit signature, and documentation. What are all important matters were there? Document it. Evidence of factual finding, document it. And document all the evidences to ensure that SRS is complied, and terms of engagement, nothing but engagement letter also documented. These are all various documentation requirements. So they can straight away ask you, what are some statements? What are the various statements the auditor has to include in an agreed upon procedure related report? Okay, so that they can ask you. And how do you plan planning and procedures? Planning the procedures in agreed upon, this itself they can ask you as a 3 marks question. Write about terms of engagement in agreed upon procedure. This itself can be asked as a 3 marks question. What are the general principles on agreed? 3 marks question. General principles means nothing but fundamental principles they are asking. All principles are required except independence. Independence is not mandatory, but rest all other principles are mandatory. You have to do the work carefully, due care. You must do the work with competence. You must maintain confidentiality. All this is common. Next, difference between audit and agreed upon procedure. And what is an agreed upon procedure? It is a procedure where you only report actual findings, no assurance is provided, and the report is restricted to only agreed parties. That's it. Simple. 4400 standard. This is easy standard. Next, 4410 compilation engagement. In compilation engagement, no, the practitioner will assist management in preparing and presenting financial statements. The practitioner will have accounting and financial reporting expertise. The practitioner has accounting and financial reporting expertise. He will use that expertise and helps the management to prepare financial statements. So this standard applies to compilation engagement of historical. You can also apply to non-historical compilation. You can also apply to non-financial with adaptions. SQC is applicable for all types of engagements, whether you are performing assurance engagement or non-assurance engagement, related service, agreed upon, compilation. SQC is common everywhere. Now, compilation engagement, what is its purpose? Meaning, practitioner uses accounting and financial reporting expertise. Here, the practitioner uses expertise in accounting and financial reporting to help management in preparing and presenting financial statements as per applicable financial reporting framework. So, management generally seek CS assistance in preparing financials. Remember, this is not an assurance engagement. Here we don't verify accuracy and completeness of evidence gathered. See, we do not verify accuracy and completeness of information. But if at all in the process of compilation we come across some material misstatement, there we need to be alert. We are not liable to verify its accuracy. But if we come across a fact that is inaccurate, then we must withdraw from the engagement, or we must ask management to correct it. So known misstatement will request to correct. Whether it is materially misstated or not, we don't have to verify. Next, purpose. Why compilation engagement? Why management prepare financials? They may be preparing financials for periodic reporting, or they may be preparing for internal reporting, or they may be doing it for external purpose, or they may be preparing financial statements for transactional purpose like mergers and acquisition. Why management prepare this? Why management compile financial information? Many reasons. Whatever the reason, it may be for general purpose, it may be for special purpose, whatever. So when management is compiling, you are assisting them, and that engagement for you is called as compilation engagement. Next, objective. Practitioner applies expertise to assist management in preparing and presenting financial statements, and he will report on that as per this SRS. Then scope of the standard. Scope of compilation engagement is more correct word. Varies, but always involves assisting management. What is the scope of compilation? Like they'll give you books of accounts and you prepare from scratch, trial balance everything, or they'll give you trial balance and then you prepare, or they'll give balance sheet P&L, you just have to verify whether they prepared correctly or not. The scope is decided by management. It varies, and management sometimes may provide only draft information or preliminary information. And remember, ultimately the full responsibility for financial information is with management. Yes or no? With respect to management judgments, with respect to accounting policies, with respect to accounting estimates, it's everything is management judgment. Management is only responsible. The person who assisted, the chartered accountant who assisted in compilation, he is never responsible. They are only responsible party. Next, different frameworks may be used depending upon nature of the entity and intended. How the financial information is compiled, by following which framework they will compile, it depends upon the requirement of the framework. Next, ethical requirements. All ethical requirements you must comply, identify threats and address appropriately, put safeguards. And remember, independence is not mandatory unless there is a requirement in law, regulation or terms of engagement. Now, when do I accept and continue this engagement? First, I agree terms with management and engaging party regarding what is the purpose of this compiled financial information, to whom it is distributed, to what are the restrictions upon me if I have to accept this. Financial, identify the framework according to which it is prepared, agree on objective and scope of your work, and clearly state what are your responsibilities, including ethical compliance. Clearly mention what are management responsibilities, that they are responsible for financial statements preparation, they are responsible for internal control maintenance, they are only responsible for accuracy of records, information, everything. And outline expected form and content of the report. I will tell at the beginning itself, I will not give any assurance. This is how my audit report, this is how my compilation report is going to be as per SRS 4410. I will just give an outline, and I will record all the terms agreed in a written letter, and I will see whether there is a revision required. As if suppose if at all sometimes companies they go for frequent. Every year they will hire one CA, or same CA will be there to assist them in compilation. He is not auditor, he is only helping in compilation. Yes or no? So see whether revision is required in the engagement letter every year. Check and then accordingly act. Next, performing compilation engagement. So engagement acceptance, this is important. Performing compilation engagement, this is important. Now, performing compilation engagement. First, auditor understands the entity, business and operations. See, you need to understand this so that whether segment reporting, current liability, non-current liability, the classification and all you can do only when you understand the business. Next, financial reporting framework you should understand, because you are assisting them in preparing financial statements as per so and so framework. So financial reporting framework is important. Now, compiling the financial, use records given by the entity, use documents, use explanations, discuss significant judgments with the management, review compiled information against the framework, report incomplete, inaccurate, unsatisfactory information to management. You see here, if at all you identify any inaccurate information, unsatisfactory, if at all you felt something, or you felt some information is incomplete, you will report to the management, request for correction, withdraw if management fails to provide necessary information. So if there is any misstatement, which you should not sign the compilation report. Next, under what circumstances we propose amendments in compiled financial information? This was asked once for 3 or 4 marks question. This was asked in the recent exam in the May 24 or November 24. It was asked. Under what circumstances? Maybe in the MTP it was there. In MTP or somewhere it was there. So under what circumstances the auditor propose amendments? If financial information does not describe applicable financial reporting framework, amendments are needed to prevent material misstatement, or compiled information is misleading. If compiled information is misleading, or amendments are required to make sure it is free from MMS, or if the financial information compiled is not as per applicable financial reporting framework. In all these 3 cases, I will request management to amend the compiled information. Next, withdraw. Suppose if management is not amending, I will withdraw from the I will withdraw. If it is not possible to withdraw, determine what are the possible legal and regulation, what are the legal responsibilities. Sometimes if at all compilation is due to a legal requirement, you are appointed by law. So if withdrawal is not possible, I will just see what are the legal possibilities that are there. And finally, I will obtain acknowledgement from management that they take complete responsibility for compiled information, and I will communicate important matters that require attention of the top management. Now, compilation report, practitioner's report on compilation engagement. So here this explanations is important. There are some statements that you need to mention. This is not an assurance engagement, hence practitioner is not required to verify accuracy or completeness of information. You don't have to verify that, but if you come across something which is inaccurate, which you know that it is inaccurate, you need to report management to correct it. Not an audit opinion or review conclusion expressed. No audit opinion is given, no conclusion is expressed. And further, if at all the compiled information is prepared on a special purpose framework, report should describe the purpose, who are the intended users. Next, alert readers that it is not possible for some other purpose through emphasis of matter paragraph. So we will alert the readers. Maybe we may use the heading alert para, or restricted for distribution, some heading we will use and then highlight. Next, description. Description of compilation engagement. What exactly the engagement is, you need to describe, and date and signature. And remember, engagement level quality control is applicable even for this. See, quality control standard we saw. Quality control is applicable for all types of engagements. So that only. So engagement partner is responsible for overall quality and compliance with firm's policies and procedures for compilation engagement. So every firm will have policies and procedures not only for audit, for also compilation. Okay, so whatever the policies for their engagement partner has to ensure that they comply it. Documentation. Practitioner must include documentation of significant matters. Record how they were addressed. Reconciliation. Compiled information you will be reconciling with underlying records, right? That one. Final version of compiled financial information that you take. Final version. Copy of final version. Management and those charged with governance responsibility, practitioner's report, and additional documents like trial balance, summary of accounting records, all that you should document. That's it. Compilation. One minute. Yeah, fine. So battery over. Fine. So engagement level, quality control, and documentation. So with this, compilation engagement is completed. In both agreed upon procedure compilation, fundamental principles, independence is not mandatory. That's it. Clear? That's it. 20 minutes it took almost. Fine. Clear, right? So in the next session, we will continue with 800 series, 2000 series, 3000 series. Okay, in the next session we will do. Just a minute.